Welcome to TheoTrade. This is Don Kaufman. It's May 9th, 2018. You are watching the Theo Night video with just about 10 minutes left in the cash session for the day. The S&Ps are staging a move to the upside. S&P's up just about 25 handles right now after exploding above our very key kind of inflection point, specifically the gravity point of 26.82. In fact, you can even see volume exploding as we kind of crossed and crested through the 26.82, fueling much of today's upside rally. Now, there's kind of a few things that I want to, really have you kind of keep in mind moving forward in the next couple of trading sessions. Number one, we're going to cruise over to the SPX for just a moment. And the lines that you see on your screen here in the SPX, and then this happens to be intraday trade, these are the expected moves, okay, for the week. And again, this is what we call a Friday to Friday expected move. If I kind of zoom in on this expected move, this is something I was talking about extensively, in fact, this morning in the chat room. Here's the start point for the week. We had precisely, about a $40 move priced in. Now, again, I want to be abundantly clear. That's $40 higher or $40 lower. Expected move knows no direction. Effectively, we came just shy of the expected move of this week. Again, if you zoom into some intraday trade, you'll see the expected move in the upside inside of the SPX is right around 27.03. Again, just shy of that inside of trade today. And why it's important? Ultimately, we are adhering to the edge of the expected move. And again, that's of critical importance because effectively we can be able to build trades off of this as we're adhering again to the expected moves on a week-to-week basis. There was similar trade inside of the last couple of weeks as we cracked below the expected move, came right back inside of it, cracked below the expected move, came right back inside of it. Did it again in the previous week in multiple occurrences. And here, this week we're actually seeing us adhere to the expected move to the upside. So it's something, to consider for intraday trades coming into Thursday and Friday of this week. Now, enough of the intraday trade, enough of looking at the S&Ps, for example, up some, again, 25 points. Nasdaq taken off to the upside once again by 1%. I think the question that you have to ask yourself at this point in the game, having watched the S&Ps kind of bounce back and forth in what has become a relatively tight range, and again, I'm just going to cruise back over to a 30-day 1 hour just to fully display all, again, we're doing is pinging back and forth between these levels. And the reason I've kind of positioned this, because what I want you to think about as a trader, are we going to be looking at all-time highs, or is it just time to short? Now, when it comes to shorts, if you're considering that we're going to go to all-time highs, all right, pick your poison in which you would want to effectively get long. One thing I would suggest to you at this point in time, whether you're long or whether you're short, let's take a quick look at a handful of equity products, including, for example, Microsoft. We're facing very near some of the recent highs. You want to take a look at something like Netflix. Again, very, very similar position, just off of all-time highs. You want to take a look at Apple. Each and every day is an all-time high inside of Apple, and we can continue on. Facebook, just off of, again, some of the all-time highs. Google, which rallied from almost the 1,000 level that we were talking about just last week, exploding back up closer to 1,100. Now, whether you want to get long or whether you want to get short, and that's really, again, some of the question here is all-time highs or time to short. I have a preference in this particular case. I am absolutely looking at underlyings like Apple that are exploding, to all-time highs, and this is an absolutely parabolic move. Now, when I ask that question, all-time highs or time to short, listen, if I'm going to be short into the Apple position, I'm not going to be looking for this catastrophic or windfall kind of downside. All I would need, is a few dollars of movement to the downside after an absolutely parabolic move. Whether you look at earnings, whether you look at the Buffett announcement, this is an underlying where I have effectively taken, albeit a small short position. In effect, what I'm doing is I'm using an in-out spread. It's just a defined risk spread, in effect, to get short. Now, here's a $2.50 wide spread for about $1.15 debit. Now, again, I could build trades like this, whether it's in Netflix, whether it's in Microsoft, whether it's in Facebook, okay? But I prefer at this point in time, after seeing absolutely parabolic moves like this, to be short. And, okay, that short position would sustain itself for the next, for example, 30 days. So it's giving me time to be right, giving me time to be wrong. I'll laugh, I'll cry, but I don't want you to look at this. When somebody sees that, the title over there, all-time highs are time to short. They're like, oh, Don is re-upping on a couple of shorts. I absolutely am re-upping on a couple of shorts, but let's be very forthright. First of all, I'm defying risk. Second of all, I've got some duration. I've got 30 days. And third, okay, what? I need a couple of dollars of down movement to see almost full profitability in these positions. And that is why I'll employ the in-out spread. Now, the opposing of this position is also relevant at this point in time. You may look at something like an Amazon or like a Google, okay? Recognize that Google is the laggard in terms of some of the products that you're currently looking at. When I say the laggard, Google is right now underperforming the crowd of technology and has not had an incredible parabolic move, okay, with the likes of, Facebook or Apple recently. Nevertheless, if you wanted to get bullish in something like Google, as I said, the opposing is absolutely true. You can go 30 days out. You can even go 37 days out and create, albeit very, very minute spreads, okay, with defined risk. In this case, $10 wide spread for about a $5 debit. These are the types of trades that are going to sustain you, okay, in a period of what seems like, again, kind of chopped out trade, where right now we're just off of one of kind of our key gravity points here of that 2682. And if you're looking at markets similarly to me on a day-to-day basis, you're not sure at this point if we take back off to the upside for a few more dollars or break back right inside of our trading range. With that, I want to thank you for joining us here at TheoTrade. Have a wonderful evening, everybody. Bye-bye.